Hi, I'm Max Keiser. This is the Keiser Report. Zombie bankers stalking the globe. Unelected, they come to terrorize your country all over Europe. Stacy Herbert, tell me more.
Well, Max, yes, unelected bankers have been put into power in Italy and in Greece this past week. And in Occupy London Stock Exchange, they're fighting back. They know how to fight. Crash, JP Morgan, buy silver, you see from the sign.
That's right, the silver stake through the heart of the bankers is the only way to kill them. You know, Iceland, just as a side note, they thought they got rid of their terrorist bankers, but they're back. So they didn't kill them dead enough.
Speaking of silver, though, let's move over to the east. And we often talk about the collapse of the U.S. empire and the shift of power and wealth from west to east. And we're going to look at a few headlines from a new site called the China Money Report. First headline, Chinese silver investment going parabolic. The China Daily reported that the trading volume of silver forwards on the Shanghai Gold Exchange, China's only exchange for the precious metal, surged 751% year-on-year in 2010. Meanwhile, the volume in September of this year was more than 6 times that of the same period in 2010.
6 times.
6 times, honey.
Chinese love silver. You know, I don't understand why people don't see that we got here a China put. Remember the Greenspan put? You know, whenever the market went down, they lowered interest rates to bail out these yacht owners in Greenwich, Connecticut. This is the China put. You're buying gold and silver, you're not going to lose because frickin' China's right behind you buying tons of it.
Well, look at how silver is treated there. 6-fold increase in the imports in September alone. Over in the U.S., we have the biggest player in the silver market is Jamie Dimon and JP Morgan, of course, which is they have a huge naked short position. They're shorting more silver than there's mined in the history of the world, practically.
That's right. They picked that up. They inherited that when they took over Bear Stearns.
That's correct. Now, Max, with this in mind, I'm looking at this next headline from the China Money Report. Thief in China scolds woman for having nothing of value to steal. So a woman in China woke up and found an intruder in her apartment in the middle of the night. But rather than run away, the guy stayed there. And the thief launched into a tirade, chastising the woman for having nothing of value to steal. He criticized her for more than 10 minutes, telling her she needs to get educated, work harder, and accumulate some kind of wealth before she gets old. The man went on, I am but a simple thief, yet I have more than you. So I thought this could possibly be Jamie Dimon. He read that there was all the silver going to China. He was like cat burglaring around looking for some silver to meet his naked short position.
Well, I think something got lost in the translation, actually, because the woman was actually sleeping on a mattress filled with U.S. dollars. And as the thief pointed out, there's no value in those. I want real money. I want silver.
But it's also, I think, the motto for the 1%. You see the Occupy Wall Street people, they're out there in Chicago, Los Angeles, Denver, New York, Los Angeles, London, all around the world. And what happens to them? The bankers throw notes out the window saying, we are the 1%, we're better than you, we create more wealth. And I think that's a good motto. This guy thinks he's one of the 1%. I am but a simple thief, yet I have more than you. And that's the truth here. They are thieves, and that's why they have more than us.
And they have, they believe the moral authority as thieves.
Well, let's move on to what happens to the thieves in China. Chinese fund managers sentenced to death after cheating investors out of $1 billion US. 2 brothers and their father were sentenced to death for cheating 15,000 investors out of over $1.1 billion in East China's Zhejiang province. So the family illegally raised $1.2 billion between 2003 and 2008 before they were taken into police custody in 2008, holding the truth from investors that their company had been losing money for years. So Max, compare this to what happens in America.
I think it's a good deterrent. I think that you need a deterrent, and if the deterrent is execution, then I think the Chinese are onto something. That's why people are putting their money into Chinese banks, taking them out of the U.S. banks. There's no deterrent for fraud in American banks. And the MF Global JP Morgan is a great example. So that's why people are moving their money out of the U.S. banks into Chinese banks, because the Chinese are willing to execute fraudsters. That's a good sign.
And the other thing we hear over and over and over again is that we, bottom 99%, must compete with China. Get with it. Cut your wages. Compete with them. How do you expect us wealth creators, to create jobs for you if you want pension plans, if you want health care, if you want wages, living wages? Look at the Chinese. Well, why do we have to live like the Chinese laborer when they don't have to live like the top 1% in China?
Quid pro quo, baby. There's got to be some reciprocity. This is what Obama did mention in Honolulu. He said that, in fact, something in Chinese banking system we like. They like to execute their bad bankers. We're going to start doing that on Wall Street. Immediately, you would find the entire situation change quite dramatically.
Well, let's look on into America and see what happens there. Are Bank of America and JP Morgan really blocking the return of MF Global customer money? So this is from Jesse's Cafe Americain, and he looks at a white paper from Typhon Capital Management in Chicago. And the paper says, by subordinating customers with collateral and segregated funds to creditors of MF Global's estate, the trustee is essentially making the creditors the beneficiary of a criminal act. The creditors in this case include JP Morgan and Bank of America. If MF Global commingled segregated funds with corporate assets, it was a criminal act. Paying such a creditor's claim with a portion of those commingled funds would make them a beneficiary of that crime.
That's right. This is a remarkable development in the recent history of bank pilfering of wealth from common people. They are now just reaching into segregated accounts themselves and confiscating wealth directly. They're not using credit default swaps. They're not using the arcana of derivatives anymore. They're not disguising their actions. They're just stealing money directly from the accounts. You open your account and it's like, oh, less money. Why? Because these banks stole it. This is a new level of insidiousness.
So Typhon Management goes on to say that the trustee involved in this is the same trustee, the same lawyers that managed the bankruptcy of Lehman Brothers. They themselves received $160 million for handling the bankruptcy of Lehman. Creditors got nothing, okay? So this capital management firm says, if this bankruptcy is managed the same way as Lehman's, it will be the end of the United States as a viable jurisdiction for commodity trading. Congress should use whatever power it has to prevent this from happening. So I'm going to cut right now to the next headline because he's pleading with the Congress to help him out. How members of Congress get rich through honest graft. So apparently, insider trading is legal for Congress. And a new study out shows that how much Congress people have benefited, including like John Boehner, reportedly invested in several healthcare stocks shortly before killing the public option in last year's legislation. Nancy Pelosi has participated in 8 IPOs, including some involving companies that had business before her house. Giving a senator or Congress person pre-IPO shares in a company is allowed under current rules, even though giving them an equivalent amount in cash would be considered an illegal bribe.
Right. That's right. They traded inside information. They're totally conflicted. And as it relates to your previous story, they're trying to lobby Congress to get this story on MF Global cleaned up because total faith in U.S. banking institutions would evaporate. But, of course, as you're pointing out, Congress is too busy trading on inside information. And Pelosi has made, I think her net worth says, tripled since she was now in Washington. So the idea of lobbying government to help is obviously going nowhere.
Well, let's look at what the article says. It says the problem, of course, is that not only are these transactions perfectly legal under existing law, the people who benefit the most are the ones who write the laws. Naturally, most members of Congress don't seem eager to take away these special benefits that can turn humble public servants into multimillionaires. So flashback, Max, to what I just said earlier in the show, where this thief broke into a woman's house in China, and he said, "I am but a simple thief, yet I have more money than you, peasant." And this is exactly what you're seeing here. These are humble public servants. They're constantly humble public servants. Hank Paulson was a humble public servant when he left Goldman Sachs and gained $30 million in tax breaks by joining government as a humble public servant.
No, right. And these initial public offerings, as we've talked about them on the show, they price them so they gap open, like the Groupon was recently a gapped open 30 or 40%. That's graft to people in Congress to pay off litigants and to basically perform all manner of fraud. It's currency on the street to grease the machine to keep this fraud going. And we've got more coming this year. Facebook is another one coming down the pike. That'll be used, again, to pay off people to pass laws to favor Facebook, for example, in the way that they violate privacy law. Well, if they want to change the law so that they can violate privacy law, they'll give people in Congress insider stock, pre-IPO. They'll get paid off in a silent graft. And it's a kleptocracy, isn't it?
Well, it's no wonder that none of the banks have, not one single executive from any of these banks have had any investigation, any serious investigation into what they've done wrong. But I want to go to this final headline. One honest judge, two lying political parties. Federal Judge Jed Rakoff is in the news again. Last week he challenged the SEC's plan to settle a fraud cases against Citigroup for $285 million, saying that the deal would recoup only a fraction of investors' losses and would leave the firm free to proclaim its innocence in private lawsuits over remaining damages. So once again, Citigroup is another sort of Goldman bleepy deal thing where they created these mortgage-backed securities, sold them to investors, and then actually bet against the CDOs themselves. But in this court case, Max, the SEC lawyer argued that the judge is entitled to assess whether the proposed settlement is fair, adequate, and reasonable, but not whether it is in the public interest. So the Washington Post says it is unclear whether judges can do much more than criticize and cajole.
Well, it's clear that they can't. Anytime you do business on Wall Street, you sign a form, a new account form, that puts you into a binding arbitration, and you don't go to a jury of your peers. This is, when I was working on Wall Street, the first thing they taught you. They said, just get them to sign the new account form, and it's carte blanche. Steal all the money you want. We got lawyers.
But Rakoff in court, he's conceded that he must give the SEC significant deference. Mm-hmm. Now, we just covered the legislative branch of our government, the people's government. And they aren't going to do anything because they benefit from the insider trading. Here you have the second of the three branches, the judiciary, and they're unwilling to do anything. So that leaves just the executive. He can assassinate a U.S. citizen. That's the only thing that we have left that we can hope for that he does.
Well, that's right. There's still hope. That's the kind of hope and change I'm looking for. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there.
Practically a ghost town. Squandered money. Abandoned mines. What is left? More than 60 square kilometers of environmental devastation, and those who are still surprisingly alive and fighting for justice.
It's getting bad out here, but not seeing hardly any birds, squirrels, ducks, geese, I don't know what's going on here.
Tar Creek on RT.
20 years ago, the largest country in the world disintegrated. What had been one became many, and each began a journey. Where did it take them?
Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to Chicago and speak with Mish, Shedlock of globaleconomicanalysis.blogspot.com. Just search for Mish. As well as blogging, Mish is a registered investment advisor for Sitka Pacific Asset Management. Mish, welcome to the Keiser Report.
Hey, it's a pleasure to be back on the show, Max.
Now let's talk about Europe, Mish. You're you talk about the rise of the Borg technocrats. Tell us about it.
I wish I had invented that term. I didn't. It came from a Financial Times article, but it's appropriate here. You know, we're talking about. So we've had two failed governments now. We've had a failed government in Italy. We've had a failed government in Greece. So that, you know, they're going to replace these guys not with new elections, not right now anyway. They're going to replace these guys with temporary technocrats. Now, these technocrats are supposed to be all knowledgeable and all powerful, and they're going to get things done. And the bond market slapped them in the face today. You know, literally, that's what happened. This whack-a-mole strategy, which I've talked about, where, you know, the ECB comes in and temporarily buys up bonds of the sovereign country that's failing. Well, you know, what are they going to do here? We've got Italy, Spain, France, Portugal, all failing here at once. You know, what are these technocrats going to do? You know, the bond market is essentially saying no to the technocrats here, right off the bat. Test the fire.
All right, now, on your blog, you said something interesting lately. You said that Greek depositors, they should pull every cent of their money out of the Greek banks immediately. So talk us through that a little bit, Mish.
Oh, absolutely. And I posted a chart. It came from my friend Steen at Saxo Bank in Copenhagen. He showed a chart of deposits, and we're seeing a slow, steady drip in Italy, but a major drip in people pulling money out of their savings accounts and checking accounts in Greece. And I said that people ought to do it. I did a post on my blog that said, you know, essentially Christmas is the time of year in which we see these kinds of defaults, restructurings, and bank closings. And Argentina did it in 2001, where they, you know, closed the bank, revalue the currency. Now, if depositors leave their money in banks, and Greece goes back to the drachma, and we have a revaluation 40, 50, 60, 70%, who knows, lower, these people are going to get annoyed. The safe and sane thing to do is for everyone to pull their money out, so they have it in euros. Now, if everyone did that, what would happen? It's going to bring upon the very collapse here. So there's a genuine chance here of sometime this Christmas holiday season or beginning of the year, New Year's, of Greece government suspending withdrawals, opening up the next day, and you know, boom, you don't have euros anymore, you got drachmas.
Okay, so you're saying historically there is some precedent for this. You're not making an outright prediction, but you're saying that given this level of panic amongst depositors, and you're seeing a run on the bank, that one of the next steps could be some kind of bank holiday. And so I guess there is some chance of that in the Eurozone. And, of course, the big question people want to know is they would look at the euro versus the U.S. dollar. You've been pretty constructive about the U.S. dollar for a while now. I would imagine that you don't see anything in the Eurozone to change your opinion on that.
Oh, absolutely not. And it's not that I'm in love with the U.S. dollar. All these fiat currencies are doomed. But the question is, what time frame here? The problem in European banks right now is greater than the problems in U.S. banks. So this is a relative thing. It's not that I'm really all that fond of the U.S. dollar. I'm pretty fond of gold, as you know, and I have been for actually 6 years or so. So I expect gold to do well. I just expect that if we see this breakup of the Eurozone, which I think is inevitable, I think that the euro goes back to parity with the U.S. dollar. That's a 30% haircut. That's pretty significant if you ask me. Now, the time frame, it really all depends on how this happens, Max. The smart thing to do would be for Germany to get out of the Eurozone and let all the pigs, you know, Portugal, Italy, Spain, Greece, let them have the euro. We've got a bond revolt that's happening just because the euro itself is structurally unsound. There has been no currency union ever in history that survived without a fiscal union. And, you know, the odds say, and the bond market says, more importantly, this is not going to be the first.
All right, let's turn our attention to Chicago for a second. You're in Chicago, and we've had a big scandal. MF Global, and there's a couple of different moving parts to this scandal. You track this stuff real closely. Tell us your thoughts on the MF Global scandal.
Oh my gosh, MF Global. Well, I'm looking at this, and I think we have a case of fraudulent conveyance. I mean, look at these guys. These guys gave themselves huge bonuses right before they declared bankruptcy. Meanwhile, the Wall Street Journal and the SEC, everyone's focusing on, all these little minor issues. I want to get straight to the heart of the matter. You can't legislate against stupidity, but you can take action against fraudulence. And anyone that took that bonus money right before bankruptcy is guilty of accepting fraudulent conveyance, in my opinion. And anyone who organized it did even worse, is guilty of organizing fraudulent conveyance. We ought to have a criminal, not a civil investigation being undergone right now in the case of MF Global. And it goes straight to the top, if you ask me. But we need to get to that top. We need to say who knew what when, who authorized these bailouts, who participated in these bailouts, and throw criminal indictments against all of them.
Well, criminal indictment seems to be the last thing on anyone's agenda at this point. In the case of MF Global, there's a missing $600 or $700 million, and apparently the creditors of the company, including J.P. Morgan and Bank of America, are claiming that they've got claims ahead of the actual segregated accounts that MF Global is responsible for. So this has gone beyond just using fancy peekaboo accounting or off-balance sheet tricks or derivatives. This is all about just taking wealth out of people's accounts directly. I worked on Wall Street for many years. I mean, this is about as bad as you can get in terms of committing outright securities fraud. Have you seen anything as bad as this in the last 10 or 15 years?
I mean, this is organized across an entire company. This goes beyond what Bernie Madoff did, if you ask me. Well beyond it, in terms of, all around, the things these guys did. And look at where they all came from. They all come from Goldman Sachs again. I mean, and look who's heading up the ECB now, a Goldman Sachs guy. I mean, everywhere you look, you have Goldman Sachs. I mean, it is pretty amazing. Or Bank of America. They're all tied up in this. And it's going to continue as long as the SEC gives a slap on the wrist of all these people. Citigroup was caught again. I don't even remember what it was. I mean, they're caught so many times. And the judge, looked at the Citigroup attorney, and the attorney said, oh, well, he didn't deny guilt. But he didn't deny not doing it either. So, and the SEC gives these slap on the hand judgments. Citigroup made something like, $700 million off of this thing, and the fine was, what, a couple $100 million? I don't remember exactly. So, literally begging these corporations to do illegal things when the fines don't even cover what they make in doing the fraudulent activity. And we've got a culture of greed and arrogance that says no matter what they do, we're going to bail them out, we're going to give them a slap on the wrist, and we're going to stick the taxpayers with the result. Fannie Mae and Freddie Mac have already cost U.S. consumers close to $200 billion. When does it stop? And we keep bailing them out. Every quarter we throw another $9 or $10 billion at Fannie Mae. When does it stop, Max? When does it stop?
All right, so you're making the point that for every $1 billion of money stolen by Bank of America, Citigroup, other banks, they get fined maybe $150 or $200 million. So obviously, it behooves them to simply continue in that mode. There's nothing to stop them. Now, I wanted to make a comparison, though, with China, because you write about China often on your blog. You talk about how American labor might benefit if the wages in the U.S. were more competitive with China. In the same vein, would you also look for similar justice standards in America that we see in China. The reason I bring this up is that China caught a $100 million or so, or $1 billion Ponzi scheme recently, and they executed the perpetrator. Do you think this might be a good idea for the head of Citibank and Goldman Sachs and J.P. Morgan to be executed by the state?
I don't think we want to get to execution. I think we just want to find them, take away their power, and just take away all their money. We had the opportunity to do that. We had the opportunity to shut down Citigroup, Bank of America, Wells Fargo, all of these banks, come in, replace them William Black style with someone who would adhere to the law and let banks be banks. Now, Citigroup is proclaiming now that banks are going to be banks. Does anyone believe them? I don't know. Why, with their track record, are any of these people believable? But I want to get back, if we can, to this technocrat thing and the rise of the technocrats, if we can, for a few minutes. Look at it. People ask me all the time, how are these technocrats, getting in power? Christina Romer came out the other day. She said she wanted the Fed to put a GDP target. Have a GDP. Good Lord. The Fed already has a dual mandate on jobs and on interest rates on inflation that it can't meet, and now Christina Romer wants to turn it into a trifecta. So, if people are asking me, how do these economic illiterates get into a point of power? And they get into it to these points of power. Christina Romer was appointed to Obama's Council of Economic Experts because, not in spite of the fact that she's incompetent. They say the things that government wants to hear. Government wants to hear we can have our cake and eat it too. We can print money and that's the solution. That's what government wants to hear. So they find these incompetent technocrats, they put these in positions in power, and that's just what's happening in the United States. It's the same thing happening in Europe, Max.
All right, Mike, we got to cut it off. That's all the time we have. We'll have you back on again soon. Thanks so much for being on the Keiser Report.
Max, always a pleasure to be on with you.
All right, that's all the time we have. I want to thank my guest, Mike Shedlock. Just search Mish in your favorite search engine, M-I-S-H, and they'll take you right to all of his great stuff. You can follow Mike or Mish on Twitter at MishGEA. You can follow us on Twitter at Keiser Report. You can also find us on Facebook. If you want to send me an email, please do so at KeiserReport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.